Hello and welcome, and you're watching Commodity Champions. I'm Manisha Gupta. Well, the US President Donald Trump's so-called Liberation Day tariffs against its trading partners have hammered the global equity markets, and the commodity markets were not spared either. The oil prices moved closer to their weakest level since 2021 as the tariffs stoked fears of global trade war, economic recession, and a negative impact on the demand. In the past week, crude prices have fallen by 15%, and natural gas prices are also down by double digits. Goldman Sachs, Citi, and Morgan Stanley have revised their 2026 outlook for oil prices on the downside. Well, the gold prices are down by more than 3% after hitting a record high of $3,167 an ounce last week. Meanwhile, silver and platinum prices also have seen a slump. Gold typically benefits from upheaval, but investors may now be selling gold to raise cash or cover margin calls in other asset classes suffering steep losses. However, gold is still in the green for the year. Among industrial metals, though, copper is worst hit. Its prices plunged the most in 5 years. Aluminum and zinc are trading at a 7- and 9-month lows. Prices of agricultural commodities, including coffee, cotton, and rubber, also tumbled amid fears that demand for raw materials could see a slump, especially coming in from China. But let's start with the crude oil prices first, and the biggest of the declines has come in for this one. If you look at from the highs of 2025, we have seen the prices go down between 35%. Joining us now to talk about commodities with me is Christopher Haines. He's head of oil and energy at Energy Aspects, and Sandeep Bhan is CEO at Guthrie International. Krit, hi, thank you so much for joining in. And we clearly have seen a lot of decline coming for the markets right now, with an expectation that you could be looking at further declines into prices, even from these levels. What is your sense? What are you going to be watching out now?
Well, hi, Manisha. Yeah, I think, look, what we're looking at is really how all of this unfolds, because at the moment, I think even a lot of people in the US administration don't actually know what's gonna happen. And I think, as you said just a second ago, the key issue is the uncertainty, and nobody really knows how much these tariffs are going to stick, how long they're going to stick for, at what levels they're going to stick for, if they get changed at all. And I think that just creates a really bad environment in general for business, because there's no policy stability there for investment. So that's the struggle that we're dealing with right now. Until we get clarity on that, it's very difficult to see a better situation.
Kit, so what's your sense? How down or how deep are the crude oil prices going from here?
Well, we have seen a bit of a stabilization recently. I think that is because we have seen such a shock in the market. We lost $10 in the last 3 trading days or something like that. You've seen equal shocks in equity markets, in bond markets in the US as well. So I think you're starting to see that stress come through. So there's probably a limitation to where we can go, but at the end of the day, we don't think that the full impact of the tariffs as they stand right now are priced into the markets. I think there's still potential for that to be priced in if we don't see any movement from the Trump administration on these tariffs.
Okay, there are various reports, and yes, we have seen nearly 30 to 35% of a decline from 2025 highs in case of crude oil prices. From here, there are various reports suggesting that we could be headed to 60 and to 55 for the US crude prices. Do you see that kind of a decline coming in?
I mean, we're almost there already, right? I think we dropped below $60. I think it's a massive threat anyway to US production, which is going to be really struggling at the moment at that price in general, but also because they're suffering as well from higher costs. There's been tariffs on things like steel and other aspects of their business. So that's going to be a problem as well for, this drill baby drill mantra. I think it's going to be very challenging in such a price environment. It's not really particularly beneficial for US business at the moment.
Oh, well, yes. Kit, how are you also looking at the demand across? Because almost everybody, including Energy Aspects, is working with a surplus in 2025. One, what is the kind of surplus that you're looking at? And what does it really mean for the businesses, for the countries going forward?
So actually, our balances are showing a deficit for 2025. So if everything... If everything sorts itself out, then we still think this market is very, very tight. And right at the prompt, at the fundamental front part of the market right now, things are still quite tight. And you can see that in in the structure of the market. So your first month versus second month trading. The problem is right now that because we have uncertainty, there's so much risk to demand further down the line. Our calculations suggest that if nothing changes and if tariffs stay in place as they are right now, as they've been announced, we could lose about 1 million barrels per day of demand. And that will put us in a surplus. And I think that's a pretty dangerous situation because 1 million barrels a day of demand loss is global recession territory. And it's pretty dangerous. So I think that's what the markets are trying to grapple with here. So you're seeing some of that price in. You're seeing some of that weakness in the last few days suggest, right, that markets are expecting some kind of an impact, but the full impact is just really not known right now because at the end of the day, I think there's a lot further to be clarified before we can get a decent number on this.
And Kit, how soon or how long do you think that could take?
I mean, that's a great question because I mean, how do we combat this when we're dealing with a president who's he's keeping a lot of his cards very close to his chest, and I think it's part of what we've seen in terms of his strategy, right? But at the end of the day, look, if we see more pain in markets, then I think you're going to have to see some kind of reaction. In a way, you've already seen some responses, I think, just to the weakness we've seen in markets recently. There's been certain, other members in the US that are talking things down a little bit, trying to say, look, there's negotiations happening. We've heard, as many as 70 countries are now talking with the US to try and resolve this. So there's all these things going on. And yeah, I think it's just, it could take a while as well, right? Because we also have a lot of these negotiations are going to be bilateral, and that's going to put a lot of stress on the US side because they're going to be talking to 70, perhaps more different nations.
Oh, well, absolutely. How are you also looking at for the Indian markets right now? Because US has been pushing more oil, or the kind of conversations that we have. I mean, most people believe that India will have to buy more oil from US. Do you see those numbers increase? And how do you see the India's relation with various others changing here? Because we have seen those concerns coming from Venezuela, for Iran, and in some sense for some Saudi countries.
Yeah, so I think, look, from the US perspective, like India is very much going to be looking at price here. So if US crude is cheap enough, then they'll take it. I think that's the story. But what we have seen is recently OPEC has increased its unwind of the voluntary cuts, so that's certainly going to be beneficial for India. I think Indian refiners themselves are going to prefer that kind of medium style crude that the Middle East produces over the lighter crudes. And yeah, as you mentioned, like Venezuela is going to be a problem. They produce a very heavy crude, and that's quite difficult to replace at the moment. But again, you do have some volumes that are similar from Iraq, from Saudi Arabia. So if they are gradually unwinding, that is going to be beneficial for Indian refiners.
Kit, what do you see changing going forward from here? I mean, as you said, the environment for businesses is at best bad right now, and the crude price is clearly struggling from where they are. Some more decline is something that's not ruled out into the markets. How would you and what would you watch from here to get some clarity? Time period, unknown. What would US do? Unknown. What is it that you will watch for clarity?
So look, I think the real answers that we're looking for is, some of the big trade negotiations. So China's a big one, European Union as well. I think these are the big trading blocks. If we start to see, more bilateral conversations there, or even, last night we heard about Japan as well. That the talks are picking up there. So if we're getting more talk there, more movement towards agreements, then that I think starts to give global markets a bit more confidence in where we're going, a bit more kind of support to the demand outlook and actually, the world working together to try and create more prosperity. So those are the key things. But I would also say in the short term, demand looks pretty good. I think most places, we are in a bit of a seasonal lull, but we're just about to go into summer. Most places that sees an uptick in demand. So, US should start driving season, so more gasoline demand. And even in Europe, you start to see a pickup at the moment. So I think fundamentally, from a supply-demand perspective, we should be getting tighter going into the summer in that near term. It's just the backdrop of that uncertainty around the wider global picture is just really difficult to deal with at the moment. So I think once that's sorted out, it's going to give the market a lot more confidence to pick up from here.
That point is well taken, Kit, and thank you for making sense of that all, because yes, there are some near-term and macro fundamentals which really seem to be putting pressure, but yes, short-term demand hasn't really been impacted, and summer demand coming up is also going to be something that could be seeing some support. Thank you so much for joining in, and it really has been some sane words coming in there, bringing in sanity into all of that price decline that we have seen for the crude oil prices. Well, let's move on and let's get in Sandeep Bhan, CEO of SD Guthrie International, to talk about edible oil prices now, where we also have seen sharp declines coming in. Sandeep, the last 1 week has seen a decline of 4 to 5% for palm, for soybean. And soybean is more important because we have US now not selling it to China, or China not buying rather. And then you have Brazil and you have Argentina coming into the picture. Where does that leave India for palm and for soybean?
See, for India, the silver lining is that palm prices over soybean oil prices spread has narrowed down, which was a week, 2 weeks back, which was close to $75, and which has now narrowed down to $15. That makes India come back to the palm oil market. And last few days, we have seen India buying very aggressively for forward month. Main reason, palm has become again a cheap oil compared to other oils in leaving behind the aggressive premiums that we were holding on to last couple of months.
Sandeep, going forward, do you see India's demand pick up? Because the last couple of months didn't see much imports.
Oh, definitely, we see that demand is going to pick up. I mean, the last couple of months, we have seen India was buying very low palm oil. It was just hardly 300 to 400,000 tons in January, February, and March months, mainly because palm was maintaining a huge premium over soft oil. Now that oil, that premium has shrunk down to $15. So we should see India back into the palm oil, and in a big way. So we should see from 400,000 back to 500 to 600,000 tons if palm maintains its at par price with soybean oil.
As we've been talking, that clarity or stability is pretty far from where we stand right now. What is your sense in the global markets, especially when it comes to agriculture as a space overall?
See, it's very too early to say about how this shift is set up, because a lot of negotiations will happen. A lot of countries are in fact in touch with US to negotiate these terms. So we have to keep wait and watch and see how it will shape up in coming months.
Sandeep, especially when a country as strong as China is involved, which is a big powerhouse when it comes to commodities, whether it's agriculture and non-agriculture, do you think that is a major problem? Because a lot of other countries you perhaps wouldn't get so bothered about.
For oil, for palm oil specific, it's a good thing for palm oil, because if US stops soybean exports to China, then China will have to come into the palm oil.
Clearly that. Sandeep, thank you so much for joining in. So a lot of clarity is something that the markets are still waiting for. And as the Secretary also said, that everything is on the table right now, a lot of back and forth as well. And the goal, as he said, into US is to bring jobs and revenues back into US. So that is something that the US, of course, will be working for. But with that, it's time for a short break. But don't go anywhere. We'll discuss the impact of tariffs on India's gem and jewelry sector on the other side.
RBI MPC meets at a time when President Trump has sent many global markets crashing by announcing shockingly high tariffs on most countries. The world economy is staring at a sharp slowdown, and some Asian countries are even staring at a recession. Will this force the RBI MPC to be more dovish? Will it announce a 50 BPS cut or a smaller cut accompanied by a dovish stance? And how will that impact the economy and your finances? Watch the RBI monetary policy on CNBC-TV18, along with instant analysis from a host of policymakers, top bankers and economists. The RBI monetary policy at these times